Good afternoon, everyone. Let's give it a few minutes, as always, to get the people online. I'm going to mute. Um, Good afternoon, everyone. As we're having more and more people coming in, just allowing for maybe one more minute before we start. I think we can start. Once again, heartful thank you to everyone who attends today this webinar. We have had approximately 200 people on it, so it's very, very positive and very, very nice to see how many people are interested in what we do here. So we have been doing quite a few webinars over the last few months. They are all available in our website for anyone who would like to go and see the recording, download the presentation, and so on. The previous ones were on liquid instruments, liquid strategies, private AMCs and funds, and so on. So this one is focused on the platform itself, right? The agenda is that we will start with the quick overview of the business, just to refresh, and for the people that have not been already in touch, right? Then I will proceed with an overview of the platform itself. So the GenTwo Pro, the place from which our clients and partners can issue new products, manage the workflows, the cash flows, the day-to-day, and have all the basically controls. And then the third part, which is probably the most important one, is to go through and live create a new product. That will be an AMC, an actively managed certificate. And in there, we will together be able to see in about 10, 15 minutes, all the different fields required and how basically easy it is in the end for somebody to create a new strategy, right? So having already seen that most of the people are online, we are able to commence. GenTwo company itself is 6 years old, based out of Zurich. We are the USP is that we're able to create structured investment solutions for our clients and partners across different asset classes. So ultimately, we have the ability to turn any idea, any strategy, any asset into a bankable product. These products all have an ISIN number cleared by SIX, Euroclear, and so on. They can have a price which is quoted on Bloomberg, and it's a certificate virtually which is able to be purchased DVP, delivers payment like the typical, let's say, equity structure products, equity flow structure products that many people are familiar with over the last few years. Now, our business is virtually based on three different pillars, right? And this is our next slide. So we have in the middle the underlyings, which are public markets, equities, bonds, structured product FX, right? This is the bread and butter of asset management over several decades. On the left side, the private markets, it's a very big niche, which is growing more and more as the months and years go by. So there, our clients and partners have the possibility to structure products that the underlyings are private markets. So it can be direct private equity, direct private debt, or portfolios of loans or real estate, or even more exotic instruments like art or collections of cars and so on. And then the third pillar of our business is the digital market. So there we have the infrastructure to create, again, structured products that have an ISIN and are cleared centrally. But inside the underlyings are digital assets such as Bitcoin, ETH, etc., up to more exotic structures. So the USP is that our clients are able to create structured notes. These structured notes are always going to be issued by an SPV, a special purpose vehicle, and that is also a very large benefit in the sense that the investors are not exposed to bank issue credit risk, right? Which is usually the case with bank issued structured notes. Now, the last slide on this general introduction before we go to the actual platform. Here we see pretty much the evolution of the business over the last 5 to 6 years. So at the moment, we are at $3.7 billion across all the different products. There has been a pretty large number of clients and partners that has been engaging with us. So it's about 300 at the moment, right? The products themselves, it's north of 1,000, again, across all the different asset classes. And on the right, one can have a pretty nice overview of what I consider is a healthy diversification between product payoffs and especially asset classes, right? Of course, AMCs, actively managed certificates, is the bulk of the business at about 70% due to their flexibility. But we see also quite some interest on tracker certificates, which is typically on a single private equity name or an index or a company, and CLNs, which is the equivalent for private debt. Now, having said that, I will switch to the actual platform, right? So this is a live session. Giving it just 1 second for the screen to refresh. Exactly. So this is just demo environment that we have created for the purposes of this demonstration, right? Here we have on the left the control panels, right? And on the right here in this specific screen, we have a number of demo products that we have created for this purpose. Now, usually for every product, we will have the same kind of layout with basic information. So I pick this one as an example. On the upper left, we can download the term sheet. We can download the data history with the pricing and also the accrued fees and so on. In the middle section, we would always have the pricing of the product, which can be zoomed in and out over a period of time. The outstanding units and the valuation will always be present in the main screen, right? On the left, obviously, all these names here and so on, parties involved are demos, right? Are dummies. Here you will have normally who is the broker custodian, who is the manager, distribution agent, and the other related parties, product denomination, currency, and then going further down, it will be the life cycle, i.e. the dates, the subscription open, and the issue date, the fees of the product. And here, actually, we will also go through another example, right? Typically, you will have management fee and performance fee for these products paid quarterly to the manager of the product. The valuation, is it in units? Is it in percent? The different accounts associated with this product. Usually you will have a paying agent account. Paying agent is a technical role, normally a bank that will be able to manage the cash flows, fetch the ISIN from SIX, and then being able also to settle DVP, delivery versus payment, with the banks of the investors, right? The custodian banks. And of course, the custodian bank, assuming we're talking about a liquid strategy. Maybe at this point, I would also mention that a product, normally, if it has liquid underlyings, so assets like equities and bonds to be custodized, there will be always a paying agent account and a broker custodian account, which can also be, of course, the same counterparty, the same bank. Nevertheless, if the product only has illiquid underlyings, like private equity or private debt, then it would only need typically the paying agent account for managing the cash and all the related processes around it, but not a custodian account, because there is nothing basically to be custodized, right? The product will be just subscribing to private equity shares or entering into a loan agreement. Now, besides this product, maybe I would also show one more example. Again, to see that always is the same format, right? We have the product valuation. This one had an initial price of 100 euros versus 1,000. So that's also possible. Here, where I'm gonna spend a few more seconds is on the fees section, right? Because this is very, very important for a large number of people. So here you see that our hypothetical client has selected a management fee, performance fee, a setup fee, potential distribution fee, and an administration fee. Now, of course, this is anyway on the term sheet of the product. It's fully transparent to any investors, right? And here you can see that we have the two roles. So the main roles for every such product is the platform advisor, as we call it. So this is a role associated basically with the SPV itself, the issuer, and then he can appoint a product manager for each one of the products that are loans. It can be also the same party, of course, right? Here, it is possible through a platform that when the product is launched, the sponsor or the manager is able to select who exactly receives what fees, even the split between the parties. And then every quarter that our systems will basically run the process, these fees will be allocated accordingly, right? Something which has proven very, very useful, since more often than not, several people would cooperate together in order to create a new product. Now, on the overview of the platform, before we go to the live product construction, I will basically quickly go through the different workflows, right? So here is any kind of increase, decrease, payment instruction, subscription, or other workflow that would be related to the products. And especially on the order acceptance templates. So in this blotter, basically, what happens is that every time there is an incoming order, either an increase or a decrease on one of the products, the manager will be able to see. So he receives a notification that, for example, in this case, we see bank 1, bank 5, and bank 2. Obviously, this will be real bank names, right, in production. And he will be able to see that a bank is subscribing or redeeming a number of units. And he will have these two buttons here to accept or reject the order, right? So this is fundamental, so that the manager of the product at all given times will be able to be on top of the liquidity situation. Obviously, for liquid products, it's an easier process, right? So let's say if there is an AMC on equities, the liquidity provided could be anything from daily to weekly to monthly. So if there is an order, an increase on the product, the manager will have to click the green button. 2 business days later, as usual, T+2 settlement cycle, this will be, the banks will settle and the cash will be in the account for investment. And then the manager will go ahead and purchase basically more of the underlyings, right? The exact opposite will happen if there is a redemption order. Then the manager knows that if he accepts it in 2 business days, unless stated otherwise, he will have to sell enough underlyings to create the liquidity to get the specific investor or investors out. So virtually, this is something that is applying to all products. It will always be the case that the order will have to be accepted by the manager or the dedicated person within the organization, so that the orders can settle and the investment will continue. Now, having said that, I would like to showcase a new product construction, right? So there are 15 different steps. Some of them take 2 seconds, other might spend a minute or two to go through the different possibilities. The idea is to be able to demonstrate and go through all the different steps, the strategy itself, the underlying universe, the fees, the fee possibilities, the liquidity possibilities, and conclude basically with how can then go back and review this product. Something which I missed mentioning in the beginning, there will be a Q&A session at the end of this webinar, as always. So I will be more than happy to receive the questions from the audience, right? And of course, we will go through all these questions live. Now, this is the first step of creating a new product. So in this case, you will see new SRF with the date, SRF, stands for structuring request form, right? Typically, it will ask who is the product sponsor. The product sponsor is a technical role that is virtually the initiator of the request, right? Normally, it's the same counterparty who is basically advising the SPV. So I would normally click yes here, and then go to the next step, which is the product name. Here, we could write something like AMC on diversified portfolio. For example, this is quite a free option, right? Typically, you will have the type of the product, be it tracker, CLN, DCN, BRC, AMC, and so on. And then something which is indicative of the strategy, because this name will also appear on the term sheet, right? So we would click next. Here, by the way, on the upper left, as you will see, we have a percentage of the progress, right, as we go through the different steps. Now, if it's a single or a basket investment, I would select basket. Single will be the case if we would be looking at a specific private equity investment, for example, right? So it's be a single company which receives the financing always from the specific product. Here, we select basket. So in the next step, it will basically ask us, okay, since you selected basket, what is actually the allocation of the different assets, right? For the use of derivatives, you can, like, for example, select yes for hedging or other purposes. Now, the default is that you start with cash anywhere in the product. Typically, for an AMC, you will not have more than 49% of cash per the strategy, right? Strategically, of course, in the beginning, it's 100% cash, and everybody understands that throughout the investment process, sometimes it can be more cash than 49%, but strategically, there should not be more than 49%, right? Now, we have this button to add different asset classes. So, for example, here, I could do equities, could leave it 0 to 100, right? I could click it again, and I can have, let's say, private equity. We can say 0 to 30%, so that there is significant component of the product that remains liquid. And we could even have a fourth component, which is we will have, for example, funds inside, which is something that is very, very, I would say, popular nowadays for a number of reasons. Actually, we analyzed that in the previous webinar. Now, once we are happy with the allocations, and by the way, this is what the platform offers automatically. Of course, in the later stage, we can also be more specific, or there is a niche asset or an asset class that is not covered here. We can always add it, right, on the term sheet if required, but this is already quite elaborate. So once we are happy with the asset classes and the composition, we can go next. Here, it's kind of a free text option with regards to investment strategy, the strategy guidelines, and the potential restrictions that the manager himself would like to impose and describe through this product. So for the purposes of time, I will just state TBD here, because this is anyway something that comes as input from our clients, right, from the managers of the product. So we go next. By the way, it goes without saying that all these fields will be reflected in the indicative terms it produced, right, at the later stage for the review of the manager. Now, this is with regards to 871M, right? So as we, I believe most people know, if there is dividends from US equities received into the product, there is a certain process to be followed. So for the sake of simplicity, I would just click yes, and we go to the next step. So here we have the parties which will basically be working together to put this product into the market, right? Typically, we will have the issuer, that is the SPV, the special purpose vehicle, which is typically dedicated to the client. The most common one that we will be using is the PCC Limited. So that is a protected cell company in Guernsey. We have about 300 of those SPVs up and running already. The paying agent is the role that we mentioned before. It's a technical role to fetch the ISIN, open the cash account, and ultimately settle DVP with the custodian banks of the investors. So here, for example, I can select Incor Bank, one of our valued partners. As a broker custodian, now this is, as we mentioned before, only relevant if you have liquid underlyings. Here I have selected, you can also have equities, so it is relevant. And I could select, for example, EFT Bank, which is also one of our valued partners, right? Now, as a product manager, administrator, and distribution agent, so the manager is the most important entity, I would say, in managing the product, in the sense that this is the entity that, depending on the underlyings, might be subject to regulatory permissions, right? They will have to be regulated in their own jurisdiction. It's the counterparty responsible for the investment process, for managing the cash, accepting the orders, and basically all the business as usual operation of the product. So we would just click demo client here. Obviously, here normally our client will see his own credentials, and then he can also select other entity if you would like to appoint somebody else. The product administrator is a technical role. It is basically in case that the manager would like to appoint a third party to be able to accept orders, right? Typically, again, it's the same as the manager. And finally, distribution agent, I think pretty much everybody understands this. These products usually are private placement products, so not for public distribution. And the distribution agent is, in most cases, the same with the product manager. But of course, there can be other parties appointed or multiple sub-distributors. It is particularly interesting that, and we'll see that in the fee section, that basically if somebody would like to have, let's say, an agreement with a sub-distributor that he will be placing products into the market for a distribution fee, which is usually paid up front, then he would add them here. And then basically when the trades are done and the product is issued, i.e. the cash is realized, basically the distribution agent will be able to receive his distribution fee directly, right? And we wouldn't have to pay first the manager so that then he will channel the cash. So it's a very, very efficient and transparent system, basically for somebody to be able to run this business. So if we go next, now we go to the product specification itself. The currency here, we have a large selection of currencies already that we have used. So these are like real products. And honestly, there are no real limitations into that, right? As long as, of course, the paying agent would support the specific currency. On the investment side, this is an indicative field. It doesn't really have any enforceability or real meaning. It's more of a legacy field for structure notes that when somebody creates a new one, there will be an indicative size, right? There is absolutely no issue with somebody putting here 1 million and ending up with 100 or virtually the opposite, because the value rights will be created as the orders basically will come, the subscriptions will come, and also throughout the lifetime of the product, right? So for the sake of argument, I will put 5 million just to have the number. Now, tenor maturity, as we all know, a structured note, which is virtually a participation or a delta one instrument on a underlying or in a basket, can have a predetermined termination date, 3, 5, 10 years, or most commonly, there will be open end. Open end means that the product will start now, be able to collect investors' capital and deploy the strategy, and then there is no foreseeable termination date, unless, of course, the manager would like to do so, right? So we will also see that there is a field for the potential redemption of the product. Now, subscription dates and so on, again, this is up to our client. I can put some random dates in the near future here so that we have a set of workable dates, right? Now, in the next field, and now we're at 50%, by the way, we have the listing or quotation preferences. Because all the products, at least so far, use SIX as the clearing broker, all the products will be open at Telecourse, which is the equivalent, let's say, Swiss Thomson Reuters system, interbanking system. Now, our clients would also have the possibility to enable or to select Vienna listing or Bloomberg quotation, that the product attributes are in Bloomberg. This has a marginal cost of 1,000 for the setup fee and 1,000 for per annum, basically for running this and maintaining this operation, right? Now, on the next step, as a distribution, so typically, as we're based in Switzerland and still about 80% of the business is in Switzerland, people would select Switzerland. Now, the retail clients offer is a very specific sub-distribution case, let's say. So normally all our products were available for professional institutional investors. In case somebody would like to have retail investors only in Switzerland, then we're able to put in place the base prospectus, create the kit, have the collateralization, and so on. This is an overlay on the standard offering, right? Standard offering is no retail investors around the world, with the exception of US persons, which is an ongoing project. Now, in case somebody would like to select other countries for distribution, this is virtually a free text for somebody to select the countries. Again, this is also not binding, but it's a way for somebody to be able to have kind of like a custom selection of different countries and jurisdictions. In the next, here's a disclaimer that there is a responsibility for distribution and the different locations and so on, rather standard, I would say. In the next step, we have the fee section. So this is something that I will also slow down a little bit so that we can go through the different fields. Now, there are two main categories of fees, right? One is the running fees, accruing fees, which are typically management fees, performance fees, and so on. And the other one is upfront fees, right? Now, in the case that somebody would like to charge a setup fee, somebody could say, okay, I would like to launch a node and I have incurred certain fixed costs, especially for private markets products, to do due diligence, to have legal expenses, and so on. So he would be, for example, able to select a specific amount, and then there he will be able to say, I would like to charge 10,000 US dollars once the product goes live to recover these costs. So this is something that we could do and amortize over, let's say, 24 months, so that this is not really impacting the NAV of the product. Now, on generally such products, we have management fee and performance fee. Management fee is not unlikely to have something like 1%, 1.5%, 2%. Can of course also be lower. On the performance fee side, we can have, let's say, quarterly and something like 20%, right? So that would be like the 1 and 20 product that people might be familiar with. Now, the hurdle rate has its own field, can be, for example, 5%. And the last field is the distribution agent fee. So this field, we put, for example, a number of 3%. As you will notice, it mentions up to 3%. So that means that every time there is an incoming order, when the manager will accept the order, there is a comment box, and in there he could specify for the specific order if this specific trade is net of distribution fees, or if it's 30 bips or 50 or 1 or 2%, up to the number that has been specified in the term sheet. Also, one last comment here, as you see, we have different rows, right? So here I have selected that platform advisor and product manager are the same entity, and the product sponsor is potentially a different one. So in theory, somebody would argue that, you know, the management fee is, for example, 0.7% to the product manager and 0.3%, for example, to the sponsor, right? So this is the place where the fee split will be inserted in the system. Now, having gone through the fees, we would move on to the secondary market, right? So these products, after issue date, they enter the secondary market stage where the price fluctuates based on the performance of the underlyings. So here we will normally see the standard spread, the frequency of secondary market. This is once again at the choice of our client, the product manager. For liquid products, somebody could even select daily. Now, the more illiquid the product gets, the less liquid, let's say, would be, of course, the secondary market. Now, since we selected that the product can have also private equity, we can even select best effort. That means that the manager has the ability, but not the obligation, to allow for liquidity throughout the lifetime of the product. And here, somebody could enter a notice period, a few weeks, a few months, some liquidity gauge, or any other kind of mechanism which is relevant for the product. Now, we are almost done actually with the product. Here we have the coupon or interest that a product could pay. So any product, regardless if it's on equity or debt, a basket of different underlyings, allows the manager to make a distribution from time to time. Now, there are different ways to structure this. Can be a fixed frequency of these interest payments. There could be a fixed amount as well. It could be a variable amount. Normally, for products that there is no specific, let's say, contractual basis in the background, like a loan agreement to provide an interest, the managers would opt for discretionary. So here you see the different modus operandi, right? So you have fixed, variable, fixed and variable and discretionary. This is the most flexible one for the manager, of course. Now, in the next step, which is just one before the last one, we see exactly what we mentioned before about the redemption, right? Normally, we would say that the higher the flexibility, the better for the manager. So at issues discretion means that regardless of the actual timeline or maturity of the product, the manager has virtually maintains the right to have a early redemption of the product. Now, last but not least, we have a rather technical drop down, let's say, or collection of different items. This is basically good to have also for our internal teams, right? They need to open the accounts, connect them with the different products, and so on. Here, since we selected, for example, ET as the custodian, we will have an automatic data exchange, right? It could also be no, it doesn't change much actually for the manager. This is something for us, for our own teams to facilitate. The product valuation frequency, it can go from daily to monthly or non-regular. Maybe to highlight that this is not necessarily the same frequency with the liquidity, right? So it could be, for example, that a product, one like this, that has 30% private equity, i.e. liquid, has a daily price evaluation, which means that every day our valuation team will combine the liquid side of the product that fluctuates with the illiquid part that will be basically refreshed less regularly, and we provide the total price of a note net of the accrued fees of the day, right? This is the daily process that we have for our products. So I would be actually able to select daily as the valuation of the product. The liquidity, of course, as we saw before, for the same product could be quarterly or it could be at best effort basis. Now, on the data format, I would just select API. Again, this is rather technical and it's a good to have. And we have arrived at the last step. So if I saw the time correctly, it took us approximately 15 minutes to create this product, even with explanations. Obviously, that means that once somebody does it once in real time, then it takes usually something like 5 to 10 minutes for every new product from the platform, right? Now, there are two options to select once we reach this stage. So on the bottom right, once I agree on the different terms, on the right, I could click request product, in which case the internal teams in GenTwo will receive the specific product request and they will start working on that. Or somebody, for example, might like to discuss certain parameters with the business partners and revisit that at a later stage. Could also click save and exit, right? So here, if I click this button, we are automatically at the tab of product issuance. So we see here the specific product that we filled up just before. So at this stage, it's still possible for somebody to review and basically change any of these parameters, right? Because we as GenTwo, of course, we can see the product in the system, but we have not yet started actively working on that, right? And once virtually the manager of the product is good to go with everything that he has filled out, then he can click the button request product, right? Now, in case, I mean, just before this webinar, I created one more. Actually, I used the same title, which is probably a bit confusing, but here in theory, somebody could have a very large number of products that are being in the works, right? And once these products are ready to go, basically go back and click the submit button. That was the end of the live session. I hope that it was as clear as it was intended to be. I'll be very happy to open the floor for the questions. So first question, which actually I guess makes a lot of sense, is if there will be a recording. Yes, this is recorded. Both the video and the small deck will be available afterwards, probably tomorrow or maybe because of Easter next week for download and replay. A question on the fees. So performance fee and hurdle rate, can you include a high watermark? Yes, absolutely. So on the fees, either recurring or performance with hurdle rates, we can facilitate the usual market practices, right? So yes, of course, there can be a high watermark. Would it be possible to have a draft term sheet before the issuance of the final term sheet? Yes, absolutely. So the typical process is that somebody will, once onboarded, go to the platform, which, by the way, is available not just from a laptop or a PC, but also from a phone, iPhone, iPad, and so on. So somebody will fill out the different information. He will be able to click the submit button, and then basically after few days, you will receive, once all the information is available, an indicative term sheet, right? So there's always a review with the manager on the indicative term sheet for the different instruments and futures. And only when he basically confirms that he is fine with that, he or she obviously we would go ahead, right? Before we have the final term sheet. And once this is the case, the term sheet will be available also in the specific section here on the left for its product, right? Continuing with the questions, what is the rough costs of our services? So the main cost that somebody will have is basis points on the NAV. So once per year, we would have the weighted average of the sum of all the products under the same SPV. And on that, we will have a basis point. Very roughly speaking, it will be something between normally, let's say 20 and 12 basis points, right? Depending on the underlyings and the structure itself. Obviously, the more vanilla and liquid the product is, so a product on, let's say, equities and bonds that has a trading account, it's a very simple product for us, right? Whereas if somebody would say, I would like to have a product with, 5 different private debt agreements, loan agreements, and 5 private equity agreements, we would basically have to see what is the best way to facilitate this product, right? Now, another question is, with regard to the partners that we are using. So every product will have a paying agent counterparty, which, as mentioned before, is the kind of technical counterparty for the cash flows and so on, and potentially a execution custodian counterparty, which is typically a bank, right? And there is a lot of choice. So for both of these groups, it's actually up to our client to select with whom he would like to work. Of course, on the paying agent side, the counterparty needs to be able to provide these services, right, and be able to have certain, let's say, SLA and certain ability to process this kind of products. Whereas on the brokerage custodian side, there are a lot more options because there it comes down to a simple trading and custodian account, right? Going further through the questions, I have to say we have quite a few, so I will try to cover as many of them as possible. So in case of different parties, will the product manager, advisor, distributor, and sponsor each have separate access to the platform? A very good question. Indeed, every different role in the product will have his own access and his own login. So the platform advisor, as the overlooking, let's say, counterparty, has virtually access to all the different accounts and strategies, right? Whereas if, let's say, an asset manager has his own dedicated SPV and has 3 different strategies that each one is managed from a different counterparty. Each one of these counterparties, each one of the managers will be able to see only his own strategy on the platform, right? And same applies for the other roles. So this is fully built in, and this is fully supported from the platform itself. Is it possible to raise equity for a private investment in Switzerland or in another country. So virtually on our side, there is no limitation with regards to the jurisdictions of the private equity or private debt targets, right? In fact, I could maybe switch back to the presentation and go to our map. Sorry, I see the map is not available somehow. No, it's here. Sorry, just a second. So yes, exactly. So this is already a pretty old slide, probably done more than a year old, but you can already see that we have been active in a very large number of jurisdictions. The three colors, as you can see, the little annex on the upper right correspond to private debt, right borrower, fund business, and private equity. So we have already been basically dealing with most of the usual jurisdictions that somebody would be looking to make such a project and such an investment, right? Going further to the questions, where can I get some material on the differences, advantages, and disadvantages between AMC and normal investment funds? Actually, this is something that we partially at least covered in the exact previous webinar. So I would totally recommend to just go to GenTwo.com and then webinar section. So that all information is available. Other than that, it depends a little bit on, what kind of fund we're looking at and what kind of investment actually is supposed to be receiving the financing, right? So obviously, we're more than happy to have a discussion if somebody would like to have a one-to-one basically comparison on different things. What is the business case basically about the digital assets underlyings? So as mentioned in the beginning, we have the three different pillars, right? So liquid assets, private assets, and digital assets. One AMC or one product can actually have any of the three, even combined. Now, on the digital assets, what we normally have is that we would still need to open an account for trading and custody, right, of these specific assets. It helps a lot, obviously, if we can have a party which can cover all the different assets, right? So we have only one trading account. Nevertheless, as we stand, in order to have a digital exchange or custodian open for such a product, we will need them to be regulated in the specific jurisdiction for the specific business, right? This is something that we have seen more and more over the last year, following the events with FTX and so on. So it's just on our side, we're rather, I would say, agnostic with regards to which party will be selected from our client, as long as, of course, this party fulfills the requirements, right? Now, a couple of maybe last questions, is we're already since quite some time online. So one very good question is, I suppose the platform advisor is not responsible for the KYC process of the investors. This is a very big benefit of actually having a structured note compared to a fund or another direct investment. So in this situation, what we have, and I can basically go to this very quickly, this graphic. So here on the top, we have the SPV, right? This ABC issuer. In the middle, we have three different products, one on private equity, one on public equities, and one on private debt. And below, we have the investors who buy the product TVP. Now, since it's a note and it has a term sheet, the process is that an investor will, or his advisor, will take the term sheet, go to the custodian bank, and ask them to subscribe the product. So it is the responsibility of the bank, of the investor, to ensure that he is in a positive target market. And that means exactly that not only the platform advisor, but also the manager of the product is not required to do AML KYC on the investor, for the very simple reason that he will not actually know who it is legally, right? I mean, as you saw on the platform, you will be able to see which are the banks who are subscribing, but you will not be able to see who are the investors behind these orders. Wrapping up the session, is daily NAV reporting supported, and in what format? Yes, Absolutely. So what happens is that let's say somebody has a strategy on equities, right? And this obviously has every day a different price as a portfolio. So what we will do is we will be connected with the custodian of this account or custodians. We can also have multiple for the same product. And every end of day, we will receive the valuation of the basket so that subsequently our valuation team with their tools, of course, will deduct the fee accrueds for the day and publish the mid price to Bloomberg if it's selected, of course, from the client. So we are able to do daily. Otherwise, it can also be weekly or monthly or quarterly, which is actually quite often the case with funds. Finishing up, the last questions I see is more about, if we're able to provide guidance on different strategies and also finding basically the best solution for our clients. Well, that is exactly what we're here for. And myself and my team, we're always very, very happy to receive requests from interested parties who would like to launch their own strategies. We love being challenged. So as I believe people would have seen over the last few years, we have had some very, very exotic products that went live, and some of them are extremely successful, like products on physical uranium, on shipping, on private equity, and so on and so on. So by closing the session, I would like to thank everyone very, very much for their time and effort to join us today. I would like to wish everybody a fantastic season for Easter, fantastic holidays, a long weekend, and looking forward to catching up with all the interested parties. Thank you very much. Have a fantastic day.